Welcome, everyone. If you're joining us, this is the webinar Structuring Pastoral Compensation and Church Payroll with myself, Eric Burgess from Aplos Accounting Software, and Scott Larson from Payroll for Pastors. Wanted to go ahead and take a moment to tell you a little bit about Aplos and let Scott tell you a little bit about what he does. So if you haven't heard of Aplos Accounting, Aplos basically means simple in Greek, and we kind of set out to build the most simple fund accounting software for churches. It was about 2009 when an executive pastor from a church here in the Fresno, California area, Tim Getz, was struggling to find software that could do fund accounting for the multi-site church that he worked for. He actually sent 2 to 3 people off to go look online for any solution that was available out there that had fund accounting, and he simply could not find it. So he set out with a couple others to just create from scratch a true fund accounting software platform for churches specifically. So we range, we serve the small to very large multi-site churches. So we have everything in between that as well. So we do advanced accounting, we do very simple basic accounting, and we have really elaborate reporting. You could just look there, a few reasons to use Aplos, just to kind of get an idea more on what it is that that are the selling points for Aplos. I want to go ahead now and just kind of introduce you to Scott. This is Scott Larson, and maybe he can tell you a little bit about himself in this slide, and get to know Scott. He's going to be usually he'll be the one that's kind of giving this whole presentation. So I'm just going to kind of be here in the background, moving the slides for him and acting as a moderator to some degree. So Scott, take it away.
Yeah, hi everybody. Scott Larson. You can't see that I talk with my hands. I do it even when we're basically on radio on this webinar. But yeah, I started doing pastoral taxes probably 25, 30 years ago because a lot of pastors were asking me to do this, and I had to figure out how to structure it. And when the laws changed back in, I think it was 1987, to allow an accountable reimbursement plan versus a non-accountable plan for how to reimburse expenses, the whole area of pastoral compensation really expanded, and a lot of people have never incorporated any of the changes that are absolutely applicable to churches. So I started doing more and more of it on advice of a pastor friend that if I kept giving away all my services, I'd be bankrupt and not be able to help anybody. I quit promoting it. About 5, 6 years ago, 7 years ago, noticed that all the major payroll companies in the country would not help pastors structure their compensation. And I was correcting their W-2s, correcting their 941s. We've got a CPA firm, and that's what we do. We do payroll, bookkeeping, accounting, audits, all of that type of thing. I decided that if the payroll companies weren't going to help pastors structure their compensation, we would. And so I launched Payroll for Pastors. It's not a great sounding name when you're on the board, in the boardroom with a pastor and 6 board members. It sounds sort of hokey, Payroll for Pastors, but it's great for an email name, and that's how I launched this. I had about 100,000 pastors and ministry leaders and their emails, and I just started promoting it this way. My goal is to help people understand that you can structure your compensation in ways to save taxes. It might not be practical for your church, and it's not for everybody, but there are different ways by how you structure your compensation, even how you report your income on your W-2s, that will have an outcome, positive or negative, on your tax return. So I hope to cover a lot of that. Starting next month, we will be rolling out tools that will allow you to get a demonstration by answering our questionnaire of what your salary package should look like. And it'll allow you to get the resolutions, the tax calculations, what your payroll would look like, a summary plan document, so to speak, for you or your pastor on what his compensation plan should look like. So we'll have more coming out to you guys on that in the future, but that's my life. I've got a CPA firm with over 4,000 tax clients in 40 states, 40 employees, offices in 2 cities. And my goal is to help pastors and churches structure their finances and taxes in order to save money. And so with that, let's maybe start with the basic payroll processing and things like that, and what should be reported on the W-2s and what shouldn't. There's a lot of confusion with it, and the best way to look at it is in a church, and probably the majority of churches have, one pastor, maybe a part-time secretary and a maintenance guy. As it grows, you might have a couple ministers and things like that, but 75% of the churches in America have under 150 people. I think the median size of a church in America is 170 something in attendance, and the average is 125. So that would mean to me that most churches would have one pastor. And so they have nobody to go to, nobody to talk to to get all this financial information or payroll information, and they don't know what to do. And on the W-2s and the 941s, your payroll reporting mechanisms, it's really obvious. And unlike a regular business payroll where everybody's pretty much treated the same, some people are in the 401k, some people aren't. A church payroll person who is usually a volunteer from the church, unless you have a large church, they're having to deal with ministers who are treated differently for taxes and payroll purposes than regular employees. So they might have 2 employees, a secretary and a minister, and their secretary is treated like a normal employee and the minister isn't. How do you report that on your W-2? How do you do the 941, the quarterly reporting? Well, the secular employees are a normal payroll reporting person, employee. It's, your gross wages, your Social Security, your Medicare. You deduct that out of their check, your federal and state withholding, and the employer, the church, matches their Social Security and Medicare tax. And so they're treated just like every other employee. That would be your staff, your support staff, any non-ministerial employee. The ministers, on the other hand, are dual tax status. They are, and this is really confusing to a lot of people, they are employees for federal income tax purposes, but self-employed for Social Security or self-employment tax purposes. So they get a W-2 as an employee, but the employer church is not supposed to be withholding the Social Security or Medicare tax. Now, that being said, so before everybody gets in an uproar, you can take what you would be paying in the Social Security tax and Medicare tax and lump that in with your federal withholding, because the pastor can elect to have withholding, and you can report the combination of all of that and whatever you want to have in federal withholding in box 2 for federal withholding. And a lot of pastors will do that. Instead of paying in an estimate, they'll tell the church to withhold X amount, which would include their estimate of what they're going to owe for self-employment tax, i.e. the Social Security tax, and their federal withholding, and plop it all in box 2. And that's sort of how the IRS would want it. The other part on the W-2, obviously, with the healthcare initiative and Obamacare, a lot of stuff is going on with that. I was working with Task, which is a national third-party administrator on healthcare issues. We had plans for churches where they could still get the insured portion or the insurance reimbursement from the church not included on their W-2. We could still get it pre-tax. And then Obama came out with a presidential executive order at the end of the year that made it clear that everybody that got reimbursed for an individual health plan had to pay tax on it, unless you were a single employee church. And in other words, if your church only has one qualifying employee that qualifies for health insurance, you could possibly still avoid having to pay tax on your health insurance and get it reimbursed. But for the, a lot of the churches, it really hit them hard because, what do you do? How do you report this? And the reality is it gets included in your W-2. That being said, yesterday, I believe, or the day before, they just passed a law, signed into law, the Small Business HRA, which is going to allow a lot of that problem to disappear. It's going to allow married couples, a pastor that's married, to have 10,000 of their medical expenses not subject to income tax and not have to be reported in your gross income, box 1 of your W-2 with the rest of your salary. The other part with pastors in reporting their salary is, what do you do with the housing allowance? And to give you just a real quick breakdown, if your cost of ministry position, your salary package is $50,000 and your housing allowance is $25,000, your W-2, just to make it real simple with no other benefits, your W-2 will be $25,000. And that's as simple as it is. $25,000 will be on your W-2. If you are being reimbursed for your health insurance, and all these other issues, we have to make additions to it if it's not an HRA, depending on the status of your church. But that's what would go in box 1 of your W-2 is just the salary component, not the housing allowance component. If the church provides retirement, if the church provides health care through a group plan, those items do not go in box 1 of your W-2. Granted, if it's a group plan, the church should have, I think it's in box 12 is employer-sponsored health insurance. I think it's code DD or something. They would have to do that. And the same with church-sponsored retirement plans. If they provide one, it would go there. The reporting of the housing allowance on the W-2 brings in some confusion as well. As much as most people, most accounting firms, most information sources will tell you, they sort of say it overtly, saying, well, if you want to, put it in box 14. Well, most people put the housing allowance amount in box 14, and realistically, that's more of a benefit to us, the accountants, because most pastors forget what their housing allowance is, and when we have to do their tax return, we absolutely have to know what that housing allowance is. Because even though that housing allowance is not subject to income tax and included in box 1, if you are in the Social Security system, it is subject to self-employment tax or Social Security tax. So it is nice to know that number. But there is no requirement that it be reported in box 14, but it is almost absolutely suggested to report it in box 14 so your accountant or whoever does your taxes will know what your designated housing allowance is. Now in your 941, when you're reporting it, the difference between the pastor and the regular employee and how you're filling out your quarterly tax form. If you can sort of visualize that tax form, if you're the person that does the payroll, and I'll make this part a little quick, the wages are going to be, the box 1 wages of your W-2 that you would have are going to be on the line 1. You're going to have your federal withholdings. When you go over into that middle of that form for you payroll processors, the Social Security taxable wages and the Medicare taxable wages will not include the pastor's income if it's being done correctly. I've seen many churches report it where they actually do pay the Social Security tax on it. And they're doing it as a benefit for the pastor because they want to pay half the Social Security tax and Medicare tax. It's really not going to affect a lot of people, but there are instances where reporting it that way, where the church actually pays the Social Security and Medicare tax, can qualify people, depending on their housing allowances and whether they're in Social Security or not, for like the earned income credit and other credits that they might not otherwise qualify for. And that's why the IRS wants it done the way it is. Box 1 is the salary. Box 14, you can report your housing, and you have your federal withholding in box 2. And other than the state information, that's pretty much all you're going to have as far as your taxable income and your withholding reporting on your W-2. The one last little item that we'll talk about as far as payroll is Obama's overtime rule. The Fair Labor Standards Act that was going to go into effect and raise the salary level from 23,000 something to 47,000 something, which in essence doesn't really affect pastors. Most pastors are going to get a ministerial exclusion called the white collar exclusion, so to speak, where their salary is safe and they don't have to worry about it. But for all of your staff, supporting staff and things like that, it could be a real pain. You have a lot of people that work in the church world that do it for God. They might make $30,000 a year salary and put 50 or 60 hours a week into work. These people were going to have to either record all their hours and get paid time and a half over 40, or get raised up to $47,000 for a salary. That, as of a couple of weeks ago, has been enjoined. There was a lawsuit, I forget what state it was in, but or what circuit, but it was enjoined by a judge where it will not be allowed to be implemented until it's reviewed by the Circuit Court or the Supreme Court. So for right now, that overtime rule is suspended, still could come back, but there is an injunction that prohibits that overtime rule from going into effect for now. So a lot of things are happening. A lot of things have happened in the last couple of weeks as far as this. I wasn't necessarily thinking that this would be a big part of the program today, but I definitely had to let that information get out to you guys. So now let's go into the next part of it, Eric. The housing allowance and parsonage allowance. With most things with pastors' taxes, in doing my research, I've found that I think it's like 63% of pastors and administrative people in the church get their information on their own or from going to seminars. And I got a quote in communications class. It's probably one of the few things that I remember back from my college days in communications. And I'm paraphrasing what it says on the screen, but it's not what you know that gets you in trouble. It's what you know that just isn't so. A lot of pastors are talking to their parishioners, they're talking to their board members, they're talking to other pastors about what to do with their tax situation. And they're getting quasi-good advice, which is, yeah, it might have been true for them, might not have been, they might have been guessing, they might have had it right. You have no way of knowing. And how you report your income. I mean, a lot of guys do it themselves and they use QuickBooks. Well, when you enter your housing allowance, or did you even notice that QuickBooks asked you for your housing allowance? And then did you notice in QuickBooks that there's two little boxes, one that makes it subject to Social Security tax or self-employment tax and one that doesn't? Well, they have two choices there. So if you're exempt from Social Security, you can check one box, and if you're not, you can check the other, but they don't state it that way. So the area of pastoral taxes, church accounting, and payroll is so much different than taxes for the normal person, the normal business guy, or the parishioner. It's just unreal. And for pastors to only have each other to go to, so to speak, or accountants that aren't pastoral tax law experts, it really makes it hard for you guys to get good information. And that's sort of our goal, is to get you good information and resources to make sure that you get your questions answered. because we don't want you just trusting in people that don't know. The church is filled with people with great intentions. But as all leaders know, great intentions are dangerous. You've got treasurers that might be CPAs, but they might be a CPA in a corporation. They're not tax law experts. You have a bookkeeper that's volunteering their time. Well, they might be able to use QuickBooks, which a lot of people used until Aplos, and which I have to say, Aplos is so much easier to use, and it's actually made for the churches. QuickBooks, and unless you created it yourself, you have to rig it to work with your donation systems and everything else. You've got to. It's not made for donors, and it's not linked to your systems. With Aplos, it's seamless. It just works perfectly. And I just went on and created a chart of accounts, and when I first looked at it, and in 15 minutes I made some journal, and it actually worked. I usually have my staff do that. So for me to be able to get online and do it means it is easy to use. So, and they're great with their customer support. They've trained our staff, and it's just really easy to use. So in looking and getting your information for taxes and for payroll, you really got to be careful of what information you're getting. In the Assemblies of God, it's pretty much Richard Hammer. He's got the Bible on church tax and accounting and law, so to speak, and a very wide network. The guideposts, I think, and the Baptist, I mean, I've researched most of what the denominations are offering. And what I see is a lot of great information. They're giving you the law the way you need to hear it, but nobody's telling you what to do with it. So there's a lot of nuances in structuring compensation, and one of the first things to realize in doing it is with the housing allowance is the decent rule. What that means is that if, let's say that you have ministerial expenses, you drive 10,000 miles a year at 50 cents a mile, you've got out-of-pocket expenses. Well, if you have, let's say, $10,000 of ministerial expenses in the year, and even if your church isn't, reimbursing them, they're still your expenses for ministry. If you have, in the example we use, where your salary package or your cost of that position, ministry position, is $50,000, and half of that, $25,000, is housing, only half of your income is taxable. Well, the decent rule states that you could only deduct the expenses, in this case as an itemized deduction, employee business expense, in relation to the percentage of your taxable and non-taxable income. So, i.e., in this case, you can only take 50% of your expenses. So those expenses, that $5,000 now out of the 10 would go as an itemized deduction, and then you have to subtract 2% of your adjusted gross income. So unless you structure your compensation correctly, you're going to lose more than half of your ministry expenses as an itemized deduction, if you itemize deduction, based on how you structure your compensation. So if you are in Social Security, you have a housing allowance, and it is 30, 40, or 50% of your compensation, and you have ministerial expenses, you absolutely want to look at possibly adopting an accountable plan and making sure that your expenses and the way you set up your reimbursements allow you to make those expenses all pre-tax and tax-free. There's absolutely ways you can do that, and I'll hopefully get to that in another slide, but that will make it so instead of having 5,000 of those 10,000 deductible, you'll have all $10,000 being deductible. And the other thing I see in the housing allowance area in structuring it is that everybody wants to know what you can take and what you can't take. It really comes down to, how much did you spend on the home? How much do you have the church designate? And realistically, what is the fair rental value of the home, including, furnishings, utility, garage, and all of that kind of thing? it leaves you quite a margin for establishing that allowance. I've had people that, their utility bills, a couple thousand a month because they got 8 kids and 12 rooms and it's a 150-year-old house. They have a $2,000 a month house payment, but they got $1,500 in utilities and $500 for whatever. I mean, they got a $48,000 housing allowance from actual expenses, but their income's only $70,000. I mean, it's justifiable by what they spent, but we'd have to look at what the fair rental value plus utilities is, because that's what the comparative, it's the lesser of the designation, the fair rental value and utilities, or the actual amount spent. Well, in this case, if you have a house that has can fit 8 kids, and you're paying $2,000 a month rent, $1,500, $2,000. I mean, that's probably a reasonable price in a reasonable location for a house that size. Well, if your utilities are $1,500 to $2,000, you're coming out at $42,000 to $48,000. You always should add a grand or two just for unforeseen expenses to your estimated expenses when you set your housing allowance. So, realistically, a $48,000 housing allowance isn't far off in this case. Well, you take the other guy that lives in a different part of the country that, has a house, the rent might be $1,500, and the utilities might be $500. That's $2,000. That's $24,000. Well, if his actual expenses are $30,000, well, you can only write off $24,000. Well, now you want to look at what the fair market value, the fair rental value of the house plus utilities could be. That could be on the proactive end. Some pastors want to be conservative and reactive. Some are pretty much in the middle and take guidance, and other ones want to be proactive. Well, on the proactive end, you could look at what it would cost you to rent your furniture, and this, that, and whatever, and come up with an allowance that would be large enough to meet what your actual expenses are. Again, in all things with life, charitable deductions, housing allowance, pastoral compensation of my kids, it's, pigs get fed and hogs get slaughtered is one of my favorite sayings when I'm doing people's taxes. If you know you spent it, you claim it, but you don't get greedy, you don't try to get too proactive with some of these rules. And what I find in talking to a lot of pastors and administrators are some of these people are just over the edge on how they claim things. I mean, they just don't claim it at all because they don't understand. Or there's the other side who are so concerned and afraid of the IRS that they won't do anything, they won't take any allowances, and they pay tax on everything. It's the range is just phenomenal, and it's really scary. So when it comes to the housing allowance and the parsonage allowance, common sense rules. The big question a lot of times I get from pastors on the housing allowance, and then we'll move on, is can we deduct our down payment? And the answer is yes. However, and the however is that has to go into all of your actual expenses, and then that has to still be compared to what the church passed as your resolution and what the fair rental value and utilities would be. So if the fair rental value and utilities is $36,000 for the year, and you know what? You sold your house, you made a fortune on it, and you paid cash for the new one, so you have no expenses, and your utilities are $6,000 a year, and you put $30,000 down on this, you can take $30,000 of the down payment to equal the $36,000, of what the fair rental value would be. But if you're in a normal situation like most people and have a mortgage, $1,000 to $2,000 a month in utilities, and you put in about $5,000 for expenses, and that's what your housing allowance is, you move and put $20,000 down on a house, it's probably not going to be deductible. It's allowable, but it probably won't be a deduction. Again, that's when you might want to talk to your tax person or something, and if you're a proactive person, resetting your allowance and then reestablishing what a fair rental value plus utilities is within an acceptable range could get you some relief in that area. But again, be careful and know who you're talking to, and if your tax person actually understands this. So let's go on. Okay, ministry expenses. Back in 1987, the IRS passed a law enacting and establishing the accountable and non-accountable reimbursement policies. In other words, what they would accept as far as how to report expenses, how reimbursements had to happen, and the such. So when the church board is dealing with a pastor that's coming on board, we challenge them to look at not what's the salary package going to be, but what's the cost of the ministry position. And I really think that that's really how the board looks at it anyways, is how much can we afford to offer this guy. And then a lot of pastors out there, when they get hired, it's going to be the board saying to them, well, okay, we want you, and this is what we're offering. How do you want us to structure it? And they put it back on the pastor. Unless you're a larger church, that happens more times than you think. And the pastor doesn't really know. They're going to call somebody and they're going to say, well, I want a housing allowance, and my salary, can't afford retirement right now. And if the church is doing something, they're doing something. If they're not, they're not. And they really don't know what to do. Well, when I start talking to pastors at tax time, I start asking them, how many miles you drive? And they say, well, I don't know, I handed in 1,000 miles or 1,200 miles last year. I said, no, how many miles do you put on your car every year? Oh, 15 or 20,000 and da-da-da. And I said, well, do you go to meetings on the way to work? Coffee shop, the hospital, post office, bank, whatever. I mean, you do that to and from work. There's a realistic way of creating commuting miles to and from work to business miles for doing your ministry. And it comes down to how pastors look at themselves, how the board looks at the pastor as far as what's allowable and what isn't allowable for taxes. And that really determines how the board's going to allow you to structure your compensation and what you do on your tax return with your expenses. If the board realizes that, hey, just like 75% of churches in America, our budget is such where we said, here's 50 grand, here's 60, this is what we can afford to offer you. How do you want it structured? They're not planning on reimbursing you for 10 or 15,000 miles that you do administering to your congregation. They may cover all of the curriculum. They might or might not cover some of your cell phone, computer needs. In the Assemblies of God, you tithe to your district. Well, they're not going to pay your tithe. But in that denomination, those tithes are business expenses that are not subject to Social Security tax if you have an accountable plan and you structure it correctly. So what happens when you start talking like I've just been talking, the board goes, oh my God, what do we do? We don't understand it. So they do nothing. And they just say, here's what we're offering. Here's a housing resolution. Fill it out. Tell us what you want to claim. And then they go to their payroll person or the volunteer who submits things to Paychex or ADP or whatever software. And they'll say, well, what's your housing allowance? And because they've done enough pastors where they know that, they'll enter that in as a not taxable item. And so the only thing that shows up on your W-2 is the salary, and the housing allowance may or may not show up in box 14, depending on what company. But they will not address structuring the compensation with the expenses because they don't want the liability. And unless the board is willing to budget it as part of the church budget, where they're going to give you a car allowance, a cell phone allowance, or things like that, which if they do it that way, normally makes it taxable to you. Well, if it is taxable to you, then you can take those expenses off as an employee business expense, if you itemize deductions, your interest, property taxes, charitable deductions. There's a section on the Schedule A, the itemized deduction form, for employee business expenses. So as miscellaneous itemized deductions. So you could take them there, but again, you're going to lose, over 50% of those expenses because half of your income is not subject to income tax. So you can only deduct half of your expenses. Well, if you adopt an accountable plan, you can avoid that. And again, some churches will and some churches won't. Most churches we talk to and the senior pastor is on board with it. If there's more than one pastor, they absolutely want to do it. Most churches where there's just a senior pastor and maybe a couple other staff employees, they absolutely want to do it because it directly affects their tax return. But the larger the church, the more cumbersome it becomes because a lot of pastors are not really gifted administratively, and they're not going to keep records, and they're not going to turn in a report every month or quarter to justify their expenses. So because of that, some of the larger churches are not going to want to adopt an accountable plan and allow the pastors to have their expenses pre-tax. What they'll do is say, okay, we can set aside X amount a month, X amount for the year for your expenses for your car or this or that. And they'll then maybe allow you to hand in receipts and get a check. In the probably proactive approach to ministry expenses, and even the main people say it is perfectly fine to be proactive in this area as long as you cover yourself. And with ministry expenses in the accountable plan, the most effective way to structure it is to have what's called the dual resolution approach. You have a resolution that adopts an accountable plan so you can reimburse the pastor, and you have a resolution that adopts a salary package. And that comes from the position that church is going to recognize what they're offering to the church as the cost of the ministry position versus calling it the salary package. Because under the cost of ministry position, there are two components, the accountable plan and the salary package, which the accountable plan is set up for what you expect to spend that you're not going to get reimbursed, i.e. for mileage, church-related babysitting, supplies, curriculum, computer, cell phone, any of those expenses that you're not going to get reimbursed for, those would go under that to calculate your cost, your unreimbursed ministry expenses under an accountable plan. Then on the other side, your salary package, you would have your housing allowance, any retirement, and things like that. So in the case of this pastor with $50,000 of income and $25,000 of housing, it's going to be stated that the cost of the ministry position is $50,000. Now, if we say he's going to have, let's just use $12,000 in ministry expenses between mileage at the standard mileage rate of 54 cents and all the other supplies. Maybe he's Assemblies of God pastor, so he ties to his district or another denomination that ties to their district, and that counts. It'd be real easy in those situations to come up with $12,000. I'm using it for simplicity of math to say that you carve that $12,000 out of what the church is offering, because the pastor knows he's going to spend that, and by carving it out separately and putting it under an accountable plan, the church is allowing that to be pre-tax. So by having that $12,000 out there, you get a separate check every month or twice a month, however you want to do it, for that $1,000. And it's not part of your paycheck, which makes it a reimbursement for expenses. Well, if you set it up proactively, there's two parts of the accountable plan law. One part where you can hand in your expenses and get a check from the church. Another one that allows the ministry, the church, the business to advance the money. So based on that part of it, as long as you document the expenditures within 60 days and return any unused money within 120 days, you're in compliance with an accountable plan. The simplest way to do this for most churches, because most don't have an administrative pastor with a lot of administrative skills, is I challenge them to get their assistant, their secretary, their wife, or themselves to go out every month and write down their odometer reading, make sure they have a copy of their salary package, and just do a little audit, mental audit of what really applies to them. And then, do they have, liability for curriculum, cell phone? If, they're paying 100 and, X amount of dollars a month for a cell phone plan, the IRS says your portion of it, they will usually allow when it's in a direct, employment of a church or a sales or whatever, you're using it all the time. Your life is ministry, your ministry is life, hopefully, that they'll allow 75% of that cost. So, you take the things that and that's what you account for. You're going to have that bill. You know if you're going to buy a computer usually, unless it blows up and you have to get a new one. But you set the accountable plan and the ministry expenses resolutions at a low level. You only want to take what you're going to spend, because you don't want to be having to try to give money back to the church for monies they gave you in an accountable plan that you didn't spend. So it's probably sounds a lot more complicated than it is, but realistically, it comes down to two simple steps for a payroll person. The board has to adopt a resolution, but then the pastor just has to figure out conservatively, what are my expenses? Set that up to pay out as a separate vendor check or a accounts payable check, just like any other bill, and then set the rest up as a salary package, which in this case, instead of the salary, the salary package was $50,000 and $25,000 as housing with $25,000 as salary. Now, with an accountable plan, instead of that salary component being 25, it's only going to be 13, because that 12,000 is not going to be taxable, so it will not be in his W-2. Some cases that doesn't matter, because you won't have any taxable income anyways because of the housing allowance. But if you have a spouse that works, a lot of them have a spouse, female or male nowadays, that might be a nurse, might be a teacher, might be a lot of things, and they have a good job, where if you've got 25 or 35,000 of taxable income on your W-2, and you can reduce that by 10,000, saves you $2,500 in taxes. Well, then if you're in the Social Security system, that $10,000 saves you another 15.3. After adjustment, it really comes up to 13.93. But for easy purposes, you're saving another 15%. So you're saving $4,000 on your tax return just by setting aside those expenses under an accountable plan. Yeah, there's a little bit of a learning curve. You might want to inform the board of what it is, because they have to pass it. How are they going to do that? Well, obviously, we could set up a Skype thing and I can explain it to your board. I have videos that explain this, and I actually have a teaching series coming out next month on a lot of the major topics that we're talking about. But there is definitely a way of doing that that will benefit the church and the pastors. The last thing on the expenses, the church too can save money. A lot of churches out there reimburse the pastor for half the Social Security tax, because for any other employee in the church, they're matching that 7.65%. Well, when they're doing that, that's a cost to the church. I had a church that had 5 pastors that had ministry expenses that weren't being reimbursed, and we restructured it. Came out with, when we did all the pastors, added up all the expenses that shouldn't be taxed, it was $75,000 worth of expenses. We saved 7.65% of $75,000. That's over it's $5,000 to $6,000 of Social Security taxes that the church didn't need to match anymore, because the pastors were taking the expenses under an accountable plan where they weren't taxable. So I think they paid $200 to have an outside service do their payroll every month in their situation, but they saved $5,600 or something like that on the reimbursements because they didn't have to pay the Social Security tax anymore. So how it's structured, how it's reported on your W-2s is very important. So whatever plans you have, whatever ways you report it, you might want to review it based on what we've talked about today. If you have questions, you can email me at taxscott1, the number 1, at AOL.com. My telephone number, probably won't give that out at this time. My cell phone will be buzzing. But if you do email me, I will call you and can talk to you about this. Also, again, my tools, my videos will be coming out in January, and we will make sure that all of you get links to that so you can look at that. But if you enter your information into the questionnaire, it will tell you how your package is structured. It'll give you the ability to play with it and see how you want to structure it. And then we will also have a tool that'll allow you to enter in your information for taxes and show you what your tax liability should be and what it could be with planning. And you can see if your tax returns and your information matches up to that. So thank you. If you have any questions, feel free to ask.
Hey, Scott, let me go ahead and jump in here. There are some questions that are coming in. I just wanted to give you a moment if you wanted to still go over like the board resolution stuff, or maybe we'd save that for another webinar.
No, I can quickly do that. Yeah, board resolutions and responsibility. Again, it depends on what the board offers, but a lot of churches, even large churches, and it came to light with the Obamacare situation and pastors having to add their health insurance, and do they have a plan? Do you have a cafeteria plan? Do you have an HRA? And nobody could find their plans. And so you started finding out that everybody assumed they had plans, assumed they had resolutions, and had none. So what I've decided to do is I have preformed all of the resolutions, and based on entering the information into the questionnaire that I have in our product that's coming, it will fill in all of the resolutions that the church needs for the pastor. If you have a health plan or retirement plans, we'll have the resolutions necessary to adopt them. If you want to have a salary reduction for your retirement plan, your 403B, we will have a resolution in there for that. The housing allowance, we have a housing allowance and parsonage allowance form that goes in perpetuity. So if you do forget to reset the allowance the next year, the worst case is it's going to be the allowance that you've always had, and that will stay in place. We have the resolution to adopt an accountable plan. As far as the cafeteria plans and the HSA, we can offer that, but again, with the dramatic change over the last year, and then now the changes going forward, we're sort of putting those resolutions on hold until we actually get some finality over the next couple months. But we will be addressing any and all resolutions that we feel that the church has to have in this solution. But they do need to have it. You need to save these. Every health plan you have, retirement plan, every pastor you have needs to have a housing allowance. If they're involved in a 403B, the church has to have a 403B, and if the pastor's contributing, they have to have a salary reduction agreement. So, realistically, the resolutions are extremely important, and that is the fiduciary responsibility of the board. That being said, because virtually no churches are ever looked at or audited on those levels, it's never been an issue. But when the Department of Labor was starting to threaten a 100-day penalty, $100 a day penalties and things like that, it really started to become important in people's minds. And one last thing on the housing allowance, just wanted to say is, being and staying attached to your denomination could have some really big impact on your taxes when you retire, because most denominations will allow you to take your 403B distributions and establish it as a retired minister's housing allowance. So whatever your, again, setting your housing allowance followed by the same rules, but whatever your housing expenses are, you can take those distributions out of your 403B upon retirement, and none of it is subject to any taxes, even, not Social Security, not income tax, nothing up to the amount of what your allowable housing allowance is. So again, thank you.
All right, great, Scott. Thank you so much. So it looks like we have about 10 minutes left in the hour, and we'll just kind of maybe keep.
And if it needs to go a couple minutes to answer questions.
Sure, we can definitely stay a little later. But let me just start going down the list here of some of the questions for you, Scott. And some of these may have been answered in your presentation, but Roy is asking, what about housing allowance for pastors living in a parsonage or church provided housing?
Yeah, and that's good. A parsonage has a fair rental value. And of course, given that you have to pay Social Security tax on that, a parsonage has no income and no cash flow to it, so the pastor in a parsonage does not have to pay income tax on it. However, the fair rental value of the parsonage is taxable for Social Security or quote self-employment taxes if you're not exempt from Social Security. So in structuring the parsonage allowance, and the board needs to look at, if you're in a farm community or in the middle of the wilderness in Alaska, it could be $200-300 a month, maybe $500 a month. You're in downtown San Francisco, it's probably going to be, $1,500 to $2,000 a month that the fair rental value is. So you've got to come up with that, agree on it. I like to, try to err toward the conservative or lower side to it. However, that is a board decision, and again, pigs get fed and hogs get slaughtered on that one. Obviously, everybody wants the lowest amount to benefit the pastor, but you don't want to get carried away with going too low.
Okay.
That's the thing. You don't want to go too high either on it.
Right. Great. Okay. And then next one from, from Shanine. Please explain how to determine if housing allowance is subject to self-employment and Social Security.
Okay. On the self-employment tax, given you're in the Social Security system, the housing allowance is subject to Social Security tax, the self-employment tax, by law, unless you exempt it out from the Social Security system as a pastor, which you can do in the first 2.5 years of being paid as a full-time pastor. Just a very simplistic explanation on that. So how does that work? Well, when it comes to taxes, and your self-employment part, most importantly, what most people and most accountants miss, if they miss anything, is that they'll take your W-2 and your housing and put it and have it as subject to Social Security tax or the self-employment tax, but they'll forget to subtract all of your unreimbursed expenses. So again, if you have $10,000 of ministerial expenses, you can actually subtract that from your Social Security tax base, which is your housing allowance and your salary. So in this case, instead of having $50,000 that would be subject to Social Security tax, you would subtract the $10,000 of expenses, let's call it, and he would only have $40,000 subject to self-employment tax. So the reporting of the housing allowance for tax purposes is done in relation to the Social Security tax base, because it's not taxable as federal income tax. And then you would subtract any unreimbursed expenses up from that. The housing allowance, as far as payroll taxes are concerned, do not show up on the 941 reporting quarterly, and it's optional if you want it on the W-2. If you do put it on the W-2, you put it as, you just type housing allowance and put the amount on box 14.
Okay, great. Looks like another housing allowance question here from Jennifer. The church directly pays the minister's utilities to the utility company. Knowing that, can the minister count this towards their housing allowance since they did not pay it?
Well, since the church is paying it, I mean, if it was in their income, yeah, but I'm sure it's not. If the church is paying the utilities directly, I would say all the other expenses would be part of his housing allowance. Again, unless the church is including that amount in his W-2.
Okay. Let's see. Melissa had a couple questions. I just want to make sure we answered those. if you can maybe write back in, Melissa, if you're still there. Oh, by the way, this is all being recorded, and we're going to send out a link later today or tomorrow with the link to the recording, so you can go back, or if you need to leave in the next 5 minutes, so you don't miss the questions. Here's a question from Bertha. She asks, how is the pastor's compensation affected if the church is paying specific expenses directly to the vendor, such as the church writing a check each month to pay for the pastor's health insurance, prescription drugs, or gas allowance, etc.? Does that make sense, Scott?
Yeah. Again, we want to separate out the medical part from the ministerial expense part. The health insurance, and again, until yesterday, it was deemed by executive order that pastors that have an individual health plan that the church reimburses for or pays directly is included in their W-2. If you're in a one employee church, you're exempt from that, and it is still pre-tax, given that you have a plan, and there's plenty of places out there advertising for those. Going forward, if you have, and you just adopt a small business HRA, it's called, for a married couple, you can exclude $10,000. The Legal Minds at B that I talked to yesterday are trying to figure out whether they can do $10,000 plus the health insurance, or if it includes health insurance. So as of now, I would say the $10,000 includes health insurance reimbursements and or out-of-pocket medical for a married couple, which obviously may or may not qualify. But unlike previous plans in that, if you have Obamacare, the amount you pay after subsidy would still count toward that. So it's going to be interesting what comes out in the next month or so. But on the medical expenses, it's sort of the Wild West out there. If you're proactive, might go with not claiming it under a certain amount, but make sure that you adopt that HRA, the small business HRA. The reality is, adopt this. This year, you'd probably add the health insurance reimbursement to the W-2. Next year, you might not have to.
Okay.
They might eliminate the penalties for not having health care, things like that. The expenses, ministry expenses that they pay directly by the church would not be taxable to the pastor.
Okay, great.
If you have an accountable reimbursement plan.
Gotcha. Randy asks, can accountable plans be set up mid-year, or do they have to be arranged at hiring or the beginning of the tax year?
No, I believe you can set up an accountable plan at any time, but it's like all resolutions when it deals with the payroll. None of them are reactive. They're all proactive. So to set up an accountable plan today would help you for the last half of the month. But it would be effect for all of next year. So somebody wanting to establish an accountable reimbursement plan, yeah, absolutely would want to have that resolution passed by the board this month and get the effect all year. But again, it can go into effect any time, and it's then from that date forward.
Okay, great. And Chad asks, our church is set up in a trusteeship. I'm assuming you just have the trustees agree to this. Would we need to bring this up and adopt in an open meeting with the entire church, or no?
Depending on what your constitution bylaws would be, I would think in general that it would be a board or a board of trustees decision, and then they would just sign off, or whoever they get the authority to sign off for the board of trustees to adopt a resolution would be sufficient.
Okay, that makes sense. And Laura asks, what about Christmas bonuses? Do these have to be taxed for regular staff?
The reality is yes. If the church had cash and handed out $20 bills to the staff, no. But that's not going to happen. The reality is, for tax law purposes, if you take up an offering like a lot of churches do to give a love offering to the pastoral staff, and you divide it up some way amongst the staff, or you give it all to the one pastor you have, if people are giving credit for the donation, it will be taxable income to the pastor. And that's sort of the benchmark. If somebody's giving it to the church to get giving credit, it's going to end up being taxable income if it goes to an individual.
Right. Okay. Okay. And we got this question earlier before we started, I think, maybe by a different person. Janet asked, is this webinar eligible for CPE? And no, we didn't formally register it for that.
Correct.
So, but it's definitely useful, very useful information. Howard asks, if you're a bivocational pastor, can you take the entire amount, 100%, of financial benefit from the church as housing allowance?
Yes, in certain situations. But again, and I'm glad you brought that up because bivocational pastors have a very interesting situation. If you're getting $1,000 a month for the church and your housing expenses and the fair rental value, are $2,000 a month, well, yeah, you can take all of it. But you might want to look, because if you're bivocational, they're absolutely not reimbursing you for expenses. So if you drive, you spend, whatever you're doing for the church is costing you, or you're giving back more than that to the church, you might want to take it as a reimbursement of expenses. So none of it is taxed and none of it is subject to Social Security. But worst case is, if you are bivocational and you take it all as housing and you're in the Social Security system, it will be subject to Social Security or self-employment tax. And you could subtract from that all of your unreimbursed expenses. But I would with bivocational small churches, I advise them to look at adopting an accountable plan. And if you're not reimbursing the pastor a lot of money, see if he actually has expenses that equal that payment so it doesn't have to be reported at all. And it's just a check as a reimbursement for expenses.
Okay. And to be clear, bivocational means like maybe the pastor is he has a day job during the week and pastors on the weekend at a church.
Yeah, I'm a CPA by day and I'm a pastor on the weekend, and I don't get paid much by the church, but I get a W-2 from my job.
Right, and that goes into this next question. My husband, who's a pastor, works a full-time job and part-time as a pastor. How does the housing allowance work? Does he qualify for housing allowance in this case?
Yes, and the other part of all of that is the housing allowance only applies to ministerial income. So if you have a job making $50,000 a year and the church is giving you $1,000 a year, you can't make your housing allowance $30,000 because your other income, doesn't count. You may qualify to have a $30,000 housing allowance, but if you don't have church-related income of $30,000, you can only go up to your church-related income. So if this guy made $12,000, he could have a housing allowance up to $12,000, given that his housing expenses, fair rental value, the rules on setting a housing allowance are met.
Okay, great. Just a few more here, I think. Another housing allowance question from Bruce. In calculating housing allowance on a parsonage, do you include the value of the utilities and the fair market value? I think you already went over that.
I would just put fair rental value, and again, it's one of those, if you're going to try to be, I would try to be conservative and make it limited. So yeah, if you're looking at a furnished versus an unfurnished house in the fair rental, you got to go with the gut on the board with that one. But I would try to balance that and go after, I'd try to go after the lowest possible fair rent, and that would be probably without furnishings and utilities. Because if you go for a fully furnished with utilities apartment, you're going to be paying Social Security tax on a lot higher figure. Now, again, if the church is going to match half your Social Security, maybe you want to go that way so more is paid in. So there's always a circumstance or a situation that warrants going either way, but that's how I view it. Unless there's some reason or somebody else is paying for it, why would you want to pay more than you legally have to? So put the relevant fair market value for parsonage allowance at a practically low level, a realistic level, I wouldn't hurt yourself unintentionally by just being overly afraid of it, because again, if it's a resolution, that's what people are saying it's worth. The IRS is not sitting there to argue about $100 a month.
Okay.
They're not looking at it anyway, so all their fears are unjustified.
Right. Okay. Just looks like four more here for you, Scott. If Jeff asks if the church is directly paying for the parsonage as well as all utilities, et cetera, is it necessary to enter this information in W-2 box 14 as housing allowance?
No, again, the only thing you have to pay, so you don't have to ever enter the housing in box 14. A lot of people do. What you would enter in there, if you wanted to, would be the fair rental value that you established as a pastoral or a board that they passed. Because regardless of what the church is paying and this and that, that's going to be what you claim is the fair rental value.
Okay.
So you want the fair rental value amount to put into your self-employment tax calculation, not necessarily all the parsonage expenses.
Okay. And
they might do a renovation, they might do the parking lot and dump it on the parsonage.
Right.
That's not ours.
Right. Okay. And William asks, if the actual housing expenses are less than the housing allowance, then that is the maximum that they may be claimed. Is that correct?
Correct. It's the lower all of the criteria. So, and what a lot of people do when they establish their housing allowance, and I encourage it, if you go through and your expenses come out to $16,482, I'll tell you to set your housing allowance at 20 or 24. Maybe 18, but it depends what type of community you live in, what costs are expected. But you always want to plan for, if an air conditioner goes out, a furnace goes out, there's a storm and you got to pay for the roof because insurance doesn't cover it, or whatever. You always want to have a couple $1,000 cushion for unforeseen expenses. So if your expenses come up $2,000 short of what your allowance is, you can only claim the expenses, and the unused portion, so to speak. Again, $24,000 housing allowance by resolution, $22,000 spent on housing-related expenses. That extra $2,000 that you received goes onto your income tax return as other income, and it is taxable.
Okay, great. Two more here real quick. Another Christmas bonus question from Lori. If the Christmas bonuses for church staff are paid out of the budget, they are taxable income, correct?
Yes. I mean, because it's budgeted, again, well, if it's a church...
kind of a gray area, maybe?
Well, I don't know if it's gray, but if the church is giving it to them as a bonus for wages for work, then it's taxable. If they're, so I mean, it almost has to be taxable. Whether it's budgeted or not by the church, it's related to their employment. So therein, the parishioners got a deduction for it. Now, a board member wants to come up and not take giving credit and give every pastor $100, it's not taxable and it's not deductible. So again, where the money comes from, if you follow the money, and if the money comes from a contribution that somebody's getting credit for and it's going to a pastor in any way, it's probably going to be taxable.
Okay. That makes sense.
But it's definitely worth looking at, because there are situations on both sides of all of these situations where you could actually make it not taxable.
Okay. And Randy asks, what's the difference between expense reimbursement and expense compensation? Is that
expense compensation? I'm not sure where that term came from, but expense reimbursement is you're getting money for expenses you incurred. So if you hand in a receipt to a business or your church, they give you a check for what you spent, or they're saying, here, we're forwarding you out of your allotted income that we're thinking your position's going to cost. We're realizing you're not going to spend it. So we're establishing $12,000 as an accountable plan amount for you that will pay out proactively. And then you just make sure you give us a form at the end of the month or the quarter that justifies that you spent the money, mileage, other expenses, whatever. So I guess you could look at the ministerial compensation or the expense compensation being what's carved out of the ministry position for the accountable plan. But that's just an amount. That's how you structure the quote package the church is offering, so part of it can be not taxable. And by establishing the two resolutions, by having the part of your income that's structured for expenses because the church can't reimburse it, but you're going to spend it and hand in a form every month to show you spent it, that income that's set aside now is not taxable. Whereas if the church doesn't do that and they just said, well, as you have expenses, hand in a receipt and we'll give you a check, well, you're spending it, they're reimbursing you, so it wouldn't be taxable that way either. But what I find with most pastors and churches, pastors are not going to be handing in 10, 15, 20,000 miles that they use for ministry because the churches can't afford paying them, basically. So that's the beauty of setting up the dual resolution approach in that situation, to allow their ministry expenses to be pre-tax.
Okay, great.
I hope that wasn't too much and too confusing.
Well, I'm leaving the slide up here for everyone who's still listening and those that answered questions. If there are questions that haven't been answered, reach out to Scott or I individually through email or at the numbers there on the slide. Just a reminder that I'm going to be sending out a follow-up email that'll have a link to the recording of this webinar and everything else that you need to kind of look back if you missed any portion of this webinar. So that said, I'd like to just thank everyone who still is hanging in there. I know we went a little bit over, but we wanted to answer all the questions. So thanks for joining us. And Scott, thank you for all your wisdom on this payroll stuff.
Well, thank you. And like I said, any other questions, just email. Be glad to try to help you in any way we can.
All right. Thanks so much, guys.